Bitcoin is literally fighting for the $73,000 level right now. One minute it pushes above it, the next minute it slips back below. And honestly, this is one of the most emotional crypto markets we have seen in a while. According to recent market data, Bitcoin briefly dropped under $73,000 after fresh U.S. strikes connected to Iran tensions triggered a massive liquidation event across crypto markets. Nearly $1 billion in leveraged positions were wiped out in just 24 hours. And honestly, this was not just a normal little dip. This was a full leverage flush. Over $890 million of those liquidations came from long positions alone, meaning traders were overwhelmingly betting Bitcoin would bounce higher. And the market moved the opposite direction fast. That is why the sell-off accelerated so aggressively. Once Bitcoin lost key support levels, liquidation engines started kicking in automatically across exchanges, and when that happens, traders basically get forcefully removed from their positions, which creates even more selling pressure. That is why crypto corrections can feel absolutely brutal compared to traditional markets. Now, the actual trigger behind this latest volatility came from escalating tension in the Middle East. Reports say U.S. Central Command carried out airstrikes tied to Iranian military targets near the Strait of Hormuz, while additional drone attacks and sanctions increased fears around broader regional escalation. Oil prices jumped immediately after the headlines. Global stock markets pulled back, and crypto followed right behind them. And honestly, this is one of the clearest reminders that Bitcoin now behaves far more like a global macro asset than the old internet magic money narrative people used to joke about years ago. War headlines move Bitcoin. Oil prices move Bitcoin. Federal Reserve policy moves Bitcoin. Global liquidity moves Bitcoin. That is just the reality of where the market is today. Now, despite all the panic though, I think there is something important people need to understand here. Bitcoin sitting around $73,000 during geopolitical conflict, rising oil prices, and massive liquidations would have sounded completely insane during previous cycles. Seriously, a few years ago this type of macro environment probably would have crushed Bitcoin much harder, but now the market structure is different. Institutional money exists, ETF infrastructure exists, governments openly discuss crypto regulation now, and Bitcoin itself has become deeply connected to broader financial systems. That does not remove volatility, obviously, but it does change the long-term picture. Now, another thing worth watching is how quickly sentiment can reverse in crypto once fear starts cooling down. We have already seen multiple situations this year where Bitcoin recovered sharply the moment geopolitical headlines calmed down even slightly. That is why emotional trading during moments like this becomes extremely dangerous, because one headline can erase billions, and the next headline can suddenly send markets flying higher again. Now, personally, I think these types of fear-heavy environments are also where people start paying closer attention to infrastructure and scalability narratives underneath the surface. That is part of why projects like Bitcoin Hyper have been getting attention recently. Not financial advice, obviously, but Bitcoin Hyper is currently priced around 0.0136807, and the project has already been featured across CoinMarketCap, 99 Bitcoins, Bitcoin Magazine, and other crypto publications. And honestly, the reason people are watching Bitcoin-related infrastructure projects more closely is because long-term adoption conversations around Bitcoin are still growing even during short-term market chaos, especially as crypto becomes more integrated into the global financial system overall. Now, personally, during markets like this, I also think security and flexibility matter more than ever. That is why many crypto users prefer secure multi-chain wallets, like the Best Wallet app, instead of leaving everything exposed on exchanges during periods of uncertainty. Because when volatility spikes this fast, flexibility actually matters. So, bringing it all together, yes, the market looks ugly right now. Bitcoin is fighting around the $73,000 level, traders just got hit with nearly $1 billion in liquidations, and geopolitical tensions are keeping investors nervous across all markets. But honestly, crypto has always been emotional in the short term. The bigger question is whether long-term adoption, infrastructure, and institutional integration continue expanding underneath all the chaos. And right now, that story still looks very alive.